Hello, and welcome to New Videocast. I'm Layla Swan, and I lead communications at New. In this episode, I'd like to welcome New Bank's global leaders for credit products. We have Emilia Lopez, GM for credit cards and collections, and Jessica Paul, GM for lending. Welcome.
Thanks, Layla. Excited to be here.
Thanks, Layla.
Let's jump right in. Been looking forward to doing this episode on credit the whole year because, well, a couple of reasons. It is New Bank's first product is a credit card, still one of our main products. And second of all, it's the largest profit pool in Latin America. We have world-class models, and we're super well positioned to keep taking more stake in that. But let's take a step back for our global audience here. How would you describe, the philosophy for our credit underwriting?
Yeah, absolutely. So I would say there are three key pillars of our credit philosophy. The first one is that we are data-driven. The second is that we are technology-centric. And the third is we are deeply rooted in financial inclusion and empowering customers. Additionally, we want to make sure that we are underwriting customers with lending or credit cards for the long term and the overall value of that relationship. So we want to make sure that those are resilient through the credit cycle and that we're taking that long-term view into account when we're looking to book, like I said, a new loan or a new credit card. On the data-driven side, we take advantage of the fact that we have 122 million customers within the New Bank portfolio. So that gives us a tremendous amount of data to do analytics and train our models. And even beyond that, 83% of those customers are active with New, and about 60% have New as their principal banking relationship, which gives us a ton of insight into their financial health and their financial situation. On the technology side, we are investing a lot in using all of that data to build world-class machine learning and AI models to make the best possible product choices and give the best possible terms to our customers. And then on the financial inclusion and empowering customer side, we very much believe in expanding credit access to customers who maybe didn't have it before, and for customers who were banked before, giving them better options, better products here at New. So we think a lot about how can we grow that relationship over time and really invest in that with our customers.
Emilia, can you tell us a little bit more about the low and grow approach?
Of course, I think part of what we do as we give opportunity for customers that usually are not getting access to the financial system is start with a small line so that we can help customers manage card. So essentially, it's a journey, not necessarily to directly give access to credit, but start a path towards credit. So we do that by, again, starting with lower lines. And as we see that the customers can handle the debt, we proactively increase their line. We also have a product that is even more targeted for an audience that either is starting in credit or has failed in the past and is wanting to get again in the wheel of trying to attempt credit, which is called Credit Builder. This is a product that has a secured line, but we have very specific ways to help the customer understand since the very beginning how can they get access to unsecured line. And we see that actually people are able then to increase their line or become fully unsecuritized customers. So I think that for our Credit Builder product, the main focus is education, and we judge our success by how many people graduate out of that card.
And they graduate to Roxinho.
Yeah, exactly.
Makes perfect sense. Okay, next credit card, Ultravioleta.
So that card is geared towards the higher income customers. And most of our history has been with mass market. And, we have lots of customers that start with us as the first card, as I mentioned, and as they evolve, they grow professionally and, personally, they get into higher income. So we actually have a relationship with many, many, many higher income customers, but we didn't have a product that kind of had grown with their needs.
Mm-hmm. So they are clients for New Bank.
Many of them.
But they're not. Maybe we're not the primary relationship.
Exactly.
Yet, right?
So we were trying to say, okay, why are they not bringing their spend to Roxinho? These customers tend to have a more transactional need with their card. So they're not necessarily looking for financing, but they want to book put big purchases in their credit cards. They want to put the big vacation in their credit card, even if they're going to pay it. So line is very important, even though access to financing is not important. So what we have been in a fairly long journey, I would say about 5 years, is continuing to refine our models that are really geared towards a low and grow model, as we talked about, to be more appropriate to underwrite a higher income, lower risk, more transactional need type of customer.
Yeah. And then you also mentioned the under 18 card.
Yes.
Tell us more.
Yes, well, again, I think that the under 18 card has come about as we have in our products additional cards, right? Like any user is able to add another user. But we realize that the needs of someone that is like your child versus your spouse, for example, are very different. You don't necessarily want to give them access to all the line. You don't necessarily, you want them to start understanding how do you manage credit line responsibly. So we set up this card that is separate. So they have their own card and they have to make their own payments and all these things, but it's a fully secured card and they have a guardian that is constantly associated with the card.
Okay, we have two more. Bear with me. Small and medium enterprise card. And then if you could just talk a little bit about the new card in Colombia, the new Control.
On the card that is geared to small businesses, I think that when we say small businesses, we really mean small businesses. A lot of them are single owners. And we actually have seen that there is a lot of overlap between our customers that are higher income and the owners of the businesses. So that what we are trying to consistently do there is manage the exposure, if you will, in a holistic way, so that we understand that the person is not, exposing themselves too much, but is being able to keep their finances so that are personal and their business separate. And our new Control card that we launched in Colombia is not a product that we have anywhere else. And why? How did it come about? There is a rate cap, an interest rate cap in Colombia called Usura, which means that it was a very well-intended law, but it was designed 40 years ago, and at this point is more driving exclusion than inclusion. And our goal is really to increase financial inclusion, one of our main goals. So essentially we developed a fee product that is now becoming very big in our own kind of portfolio, and it's allowing us to give access to credit to more people. Again, in the same way that we talked about low and grow, making sure that people kind of like manage the credit responsibly, but it has been one of those things that you look at the market, what you do in other places doesn't work, you find a way, and there are more countries in the world that have a rate cap than not. So now we have a product that we could go and take into the next, 2 or 10 countries that happen to have an interest rate cap.
Yeah, so by capping the interest rate, the government had intended not to exclude people to sort of protect them, but they're actually being pushed into loan sharks, right? And
right, some of those options that are actually not regulated and the consequences of failure are much higher than not paying a loan. The spirit is very well understood, but the way that Usura is calculated today is essentially combining commercial loans and personal loans. So those rates are not comparable. So you're establishing a ceiling for personal loans based on what is happening in commercial loans that obviously just, you can imagine the volumes, bring the average down. Yeah. So we are trying to at least separate that because, again, we understand the intent, but we think that is driving the opposite effect that was intended.
So ultimately, by segmenting and by being a little more flexible on that cap, we can bring more people into the formal system for credit. That makes a ton of sense. And so it's not just credit cards, right? Starting in 2019, we launched personal loans, personal unsecured loans, and that portfolio has also been growing into the unsecured field and options for SMEs, small and medium enterprises. Jess, can you tell us that part of the journey?
Yeah, absolutely. If we look back to when lending started in Brazil in 2019, lending in the market was an incredibly bureaucratic, a very complicated product full of tons of fees. And so Nubank wanted to come in and do it our way, right? We wanted to have transparency. We wanted to have the best possible terms for customers, no hidden anything, right? This is very core. No small print, no hidden fees. This is very central to our culture.
It really is.
And so we started started in Brazil in 2019 with our unsecured lending product. We then expanded that to Mexico in 2023 and expanded to Colombia, where we are sitting today, in October of 2025. So we are very excited how we've been able to leverage a lot of the scale and the technology that we've been able to deliver successfully to our customers in Brazil and bring that over into our newer geographies as well. In parallel, as you mentioned, we've also expanded to small businesses, PJ, if you will, in Brazil, currently focused on more of the smaller businesses, micro businesses, offering them unsecured working capital loans, very similar to our unsecured personal loans, but focused on the needs of that particular business.
And for unsecured, are we leaders in the market, right?
We are. So in Brazil, we are the number one in terms of originations in unsecured lending. And to Amelia's point, many of those customers are getting access to loans potentially for the first time, or potentially for better rates than they could get anywhere else in the market, which we are very much focused on.
Got it. And then we moved to secured options, and I think that's a big work stream in Brazil, right?
Yeah, secured lending is huge in Brazil. So we started this part of the business back in 2022, so a couple of years after our unsecured business had started to mature. Our first product here was investment-backed loans. And so the idea is that a consumer could put collateral in an investment instrument, but then borrow against that if they had short-term liquidity needs. After that, in 2023, we started to enter the payroll lending market, which in Brazil is an incredibly large, profitable, and very customer-friendly product that offers some of the lowest interest rates that you can borrow with anywhere in the industry. We also offer FGTS loans, which are an anticipation of Social Security benefits. So consumers can use future savings and borrow against that for short-term needs as well. And then more recently, in 2025, with the launch of private payroll, which was launched by the government back in March of this year, we also entered the private payroll loan business, which opens up this product for many, many more customers who are employed by private companies. And so we're very excited about the future potential of that product as well.
So all in all, how many customers do we have in this segment? And compared to like the size of the pie that we already have in Nubank, which is like more than 60% of the adult population, is there room to grow?
Yeah, absolutely. So today we have almost 7 million secured loans, which sounds like a big number. However, as you mentioned, when you compare that to the size of the opportunity and the fact that Nubank does have 60% of adult Brazilians have a relationship with Nubank, and we see that of the payroll market, roughly 50% of customers borrowing in this modality already have a relationship with Nu. But this is still very much day one for us in this product. The other thing that's really important to mention as we think about expanding our product portfolio is that the diversification of products, both in credit card and lending, is also bringing a lot of portfolio resilience, given that these secured products tend to be much lower risk, are much safer, both for Nubank and for customers. And so from an overall portfolio management perspective, we think it's very important to have a balance between unsecured and secured lending. So even just a year ago, lending represented about 25% of our overall credit portfolio. That is now about a third of our credit portfolio is driven by lending. And we've seen tremendous growth within the lending products. So in secured lending in particular, we've grown 200% year over year. Within unsecured lending, that's been about 70%. So we continue to see very strong growth in these products while we're continuing to grow credit card as well. So we have a lot of opportunity ahead of us as well.
Emilia, and what was the growth for the credit card portfolio? And I'm going to take this perfect segue. Can you tell us a little bit about how this diversification of the portfolio helps the business?
Absolutely. So I will say that only about 6 years ago, credit card represented 100% of the revenues of the company. As of the second quarter of last year, it was already about 75%. So this doesn't mean that credit card is not growing. We are growing about 24% year over year. And obviously the growth shows different in the different markets that we are. We are more penetrated in Brazil. So the growth there is coming more from the new segments that we have gone into. And Mexico and in Colombia, we are still very much continuing to expand the credit market, if you will, by creating inclusion into the market and being able to bring more customers into our franchise.
Got it. And among those clients who are already included, they already have a credit card. How are we working to improve that relationship, improve also our RPAC?
So that is our main goal, right? Like we have two paths of growth. We definitely continue to try to bring more customers to the franchise. And how do we do that? We continue to improve our model so that we can approve more people, give them higher lines from the beginning, and then give them faster increases of line as, again, they demonstrate that they can manage the debt. So essentially that granularity of understanding the risk so that we can really truly differentiate how we bring them on board is part of our strategy. And then is how do we then cross-sell and deepen engagement. So it's both a strategy of how do we get our customers to engage more with our card, bring more of their spend and their financing needs to us, but also how do we get them to do lending? How do we put in front of them all the features that we have in our savings accounts? How do we, in Brazil, get them to try NuCel? Like, so there's so many things that we focus to make sure that we are bringing more solutions to our customers, but it's also helping us in that diversification strategy.
I'm going to switch topics just a little bit. In the last video cast, I interviewed Laura, who is your peer, but for Global Bank Account. And she was telling us about how do you design products that really matter and are customized to people in different regions. And just recently, we've launched personal loans in Colombia, where we are taping this video cast. So can you tell us about the journey from going to a platform and a uniform, design going into a country and tending to the specificities there?
Yeah, absolutely. I would say that a lot of the foundational elements are very similar across many geos, that we're in today and across the world. So the things that are not changing, I'll start with that, right? Our credit philosophy does not change. The things I mentioned in the beginning around being data-driven, being technology-centric, obsessing about customers, these things are not going to change. The other one that's not going to change is the platform capabilities that enable us to offer credit cards and loans and bank accounts. So this is the foundation, really, of everything that we do in a global perspective. But there's a lot of things that we also need to customize at the geographic level, right? Here in Colombia, we're launching 2 types of loans. We're launching a more traditional installment loan, but we're also launching a small amount loan. And there's different regulatory requirements for these. And so we need to go very deep to make sure that we understand what the requirements are, making sure that we're building it in a compliant way, because there are very different requirements across Brazil, Mexico, and Colombia. The other thing I would say that is critical is understanding your consumers in each of these markets, which in our 3 existing markets are even pretty different within Latin America. So a lot of this is making sure, again, that we're customizing to the regulatory requirements of the market, but then obsessing about what makes an amazing credit card or a loan in Colombia, and how is that different than Brazil? So I think that is really critical as we think about our international expansion.
Yeah, and ultimately delivering it in a way that kind of abstracts all this background, work and noise from the client experience itself, right?
Exactly. I mean, if I'm a Colombian, I should sign on to my app. It should be tailored to look and feel that this was designed for me, right? This was not designed for a Brazilian that's living in Sao Paulo. And so we make sure that all of those experiences really feel tailored to the needs of that particular consumer, built on top of a global product and credit layer that gives us the scale and the extensibility that is a lot of our advantage as well.
Emilia, one of the big themes in this conversation has been about offering credit very responsibly to our customers. Can you tell us a little bit about your approach on collections and debt renegotiations?
Absolutely. So I think our frameworks are really oriented to do 2 things. One, support the customers while they're going through a difficult time, and also try to find resolution in as quick as possible manner, I will say. So we do lots of things. So first, our frameworks also incorporate our ability to bring those customers back into the franchise. So we offer deep discounts, we give them time, we allow them to change their due date, for example, within the app. But obviously, we follow the regulation of each country, right? If that is considered a renegotiation in a specific country, we obviously register as such, but we put almost like the control in the customer's hands. So this is very important and central to what we do. The other thing that we are leaning in on aggressively is on leveraging AI to be much more customized in how we interact with the customer. So we can listen to what is the problem that they're going to, offer them specific offers to them. And we are adjusting the tone of the communication, the frequency of the communication, all of these things, so that, again, we can improve the efficiency of our collection strategies, but at the same time be supportive to our customers, so that on the other end of the journey, they are willing to re-engage with us.
Yeah, it can be an emotional moment, right? To
Very.
be in trouble and not being able to pay your debt, right? And do we have good interest rates and good policies for renegotiation?
Yeah, as I was mentioning, we offer really competitive discounts and competitive rates to allow customers to get back on track. And we've done some really unique efforts as of late, and I would love just to describe those.
Yeah, absolutely. One of the ones that I have found really exciting and compelling for customers is what we called our Fresh Start campaign. So this was one of the most ambitious, most aggressive debt resolution campaigns we've had to date. It reached about 6 million customers, so a huge portion of those who have historically struggled with debt, to offer discounts up to 99.9%.
That's
and
a good
really,
discount.
That's a good discount, right? And really focusing on customers who have shown both an ability and a willingness to pay, people who are really trying to improve their financial situation. And as Amelia mentioned, many of these customers were able to bring them back into credit in a very, safe way, leveraging Low and Grow, leveraging some of our credit builder products, as we have talked about, as a way to re-enter the system and not get in trouble again another time. So as I mentioned very early in today's videocast, at Nubank, we always think about the long-term relationship and the long-term value. So we don't think of, being in collections as a terminal state by any means. We all have tough times and struggles sometimes. And so, we
It's
really...
not a short-term game, right?
Exactly.
This customer is valuable for us in the future.
Exactly. So we really want to invest in that long-term relationship and showing that we've got their back, even in times that are pretty tough.
Let's talk a little bit about the journey from 2014, where we started with the Roxinho, the purple card, and now Nubank is a multi-country, multi-product platform. So what role does credit have in this engine for the company?
So for us, we think that leading with such a crucial need as access to credit gives us the right to then develop more engaged relationships and being able to unlock kind of like a flywheel of principality. Then the customer feels that their main need has been served, and then when we present other products that are also very high quality, then they are more likely to engage in them, and then we deepen their relationship.
Yeah, absolutely. And we see that within our existing geographies, but also around the world, credit continues to be a massive part of the economic opportunity in financial services as well. Roughly 70% of financial services profit pool in Latin America is driven by credit. So this will continue to be a very important economic lever for the company. But even more important, going back to some of the original philosophies, opening up financial access to markets where the very well served, the very high income, they had a ton of options. Everybody else had very few. And I think that is so central to our customer obsession to make that sure that we are providing that financial access to helping people get into the system, to build savings, to grow, to borrow, and to really have healthy seasons of their financial lives is incredibly critical, I think, to the long-term sustainability of the company and is really crucial to our mission. So it's not just an economic play. For us, it's very much, a customer side of it as well.
Yeah, and to wrap up, I was hoping to hear from both of you about what you see in the future. Like, what's the vision for the future of credit underwriting?
Absolutely. So I will say that and you've heard this because you're part of us and you say it as many times as we do every week, is still day one, right? So all the innovations that we share, all the success stories that we share, we still have so much to accomplish. From the continuing to refine the foundational, so we have to be able to continue to improve our models so that we can be more granular in our understanding of risk, to be able to approve more people, give higher lines, grow faster, and develop products that serve a bigger variety of customers. As I was saying, from people that are underage or are starting in credit, to high-income customers. And so that's part of our goal. The other thing that we are doing is really emphasizing additional support that we can provide. So we have lots of features like, again, additional cards, virtual cards that are single use or a specific merchant use to provide all of that. And that also allows us to bring more and more people and get more data on the customer that then fits our models to have better perspectives. And the other thing that we are doing is leaning into AI in absolutely everything that we do. So we are excited about the prospect, but as Jess will say, we're using it everywhere that we can and
really are.
leveraging those benefits that we expect to get from it.
Yeah, absolutely. On the lending side, we also continue to lean in really heavily to AI. One thing that's particularly interesting about lending that we've talked about today is that even if I rewind about 3 years ago, lending had one product in one country.
Yeah.
We now have 13 products across 3 geographies, and that will only continue to expand as we have different secured offerings, more offerings for our Pajota, our small business customers, and that adds a ton of value and a tremendous amount of optionality. But it can also create a ton of confusion for customers, right? If I need to borrow money and you present me with 10 different options, it's very difficult to know which one of those is right for me.
Yeah, but
right?
we can help them navigate.
Exactly. So that's where we're thinking of, this concept of AI guidance to really understand what is a unique consumer's financial situation, what are they borrowing for, do they want to leverage collateral or not? And so there's just so much innovation that we can do to help customers navigate to the right product or set of products that is most suited to meet their particular needs. So we're very excited about that use case. We're also very excited on the credit side to continue to make our models even better, because then we can offer lower prices or more lending, more eligibility. Into the flywheel point, that should just create even more engagement for Nubank, right? So we think there are a ton of use cases for AI, and I think that will be, I guarantee, that will be a big focus as we head into 2026.
We're all very excited for that. I do want to thank all our listeners for staying till the end, and thank you so much for your time.
Thank you, Layla.
Thank you. Bye.